All right.
Hello, everyone, and thank you very much for being with us this evening. We're very excited to get started and go over our presentation. Are cryptos ready to take off, right? So, and of course, with us this evening, we have a crypto specialist, Ryan Wilday. Now, many of you, if not all of you, are already very familiar with Ryan. But for those of you who are not, I'm going to be posting some links in the chat box where you can get to know Ryan a little bit more and also get some access to some analysis that he's been publishing, so you can start to learn even more about what he does day in and day out at ElliottWaveTrader.net and what he sees going on in the crypto market. But without further ado, we have a lot to cover tonight, and I'd like to just get things started with our analyst here, Ryan. Ryan, thank you so much for being here with us this evening.
Thank you, Tom. So our cryptos are ready to take off. And so what we're going to see here is my outlook for 2019 and a little bit into 2020. I'm gonna frame up most of the discussion in regards to Bitcoin. I think a lot of avid crypto traders really consider the Bitcoin dominance theory, if you will, that really this market moves with Bitcoin as sort of the center of liquidity, if you will. You know, a lot of pairs in crypto trade in Bitcoin. I'm not going to ignore the rest of the market, but I want to really focus on the action that we have in Bitcoin off of the December low, and what I'm looking for to really confirm a bottom. To give you kind of the short answer, I don't think we've confirmed a bottom yet, though we have the potential. And at the same time, I'm going to touch on a few of my stronger altcoins that are really set up for what we call in the Elliott wave theory, the third wave. Bitcoin is much farther along in its overall count, so we're not looking for a third wave here, but we are looking for a strong rally to show out of this bear market at some point in time. So without further ado, I'm just going to, let's see, click this. Okay. So just real quick on myself, I actually come from a background of product development. I actually joined ElliottWaveTrader as a member in 2015. And I was this crazy guy that was posting counts on, after I learned the Elliott wave theory, posting counts on Ethereum in 2016. And I got a little following on the site. And so eventually Avi asked me to lead our cryptocurrency service in the first cryptocurrency service on the site. And that was at August 2017 that started. Fortunately for me, I got started about 6 months before the bear market ensued, but we did a pretty good job of knowing the top was coming in. We got really brutal confirmation of it in February, though we were warning of it even starting in December. And really the most of the service life has been in the bear market and sort of weathering through. Just real quick, I'm going to dispense the marketing, but this is what the site looks like. We kind of have a blog format. I wasn't able to catch an image of anything but me posting, but any member that is a non-trial member can post all they want. They can try their hand at analysis. It's sort of a free fall in that regards, but you'll see me post charts all day long. I do Bitcoin down to 5-minute charts, Ethereum down to 5-minute charts, and then roughly about 1 hour charts on any other, as well as daily and long-term counts on any other crypto that's requested. And I think the charts in my database are roughly about 150, probably is climbing at this point in time. So it's not just me, me and my analysis. It's also a community of crypto traders and those that are learning crypto trading can come into this community and also learn how to set up accounts and security and whatnot. So I'll move on from there. That's kind of all the marketing that we'll do. We'll give you a trial link if you're interested in the end. Just some disclosures. I mean, just anything here I might mention is not construed to be an endorsement of any product, service, or you trading this market as a recommendation. You have to figure out what's right for you. There's immense risk in this market, as I know a lot of veteran crypto traders know. It's a very volatile asset, really the most volatile asset that we have outside of, say, standardized options and whatnot. So first I'm going to start and look back at this great bear market of 2018 that we faced. We topped around the 19K region. I mean, I think there was some slippage in some exchanges that got a bit higher, but that's sort of around the rough average that you'll see. And then we declined, at least so far, into the December low at 3,100. 3,120 is what I track as my extreme price using BitMEX. We had a very euphoric top. This reaction here. I mean, even by Elliott wave standards, this was a highly extended fifth wave, which we'll talk about. We originally were looking for a top around 14. We said that if we go past 14, 19 was key, and boom, that's what happened. And I think within a couple hours, we dropped by about 30% once we hit 19. So we'll talk a little bit more about the theory, but it gave us levels to look at for a top. And yet we've seen this brutal decline, about 85% in dollar figures, roughly. Sentiment itself, as I mentioned, the euphoric 5 top. I like to joke about that time. I cannot tell you how many free lunches I got because everyone that was not trading crypto at the time wanted to talk about Bitcoin and wanted to take me out to lunch. That was the nature of the sentiment. That was my sentiment indicator. And just about every one of those lunches, I said, if you're not trading cryptos now, don't start, because we'll have a bear market come in at some point in time, probably very quickly. That was just the nature of the sentiment. We know from markets as they hit euphoria, that's a big warning sign. The challenge is always understanding whether it's a larger degree euphoria or something more mini scale before a sort of a bull market pause. What we did know from Elliott wave theory is we were probably entering a very major bear market, and it really took till February where we knew that it was going to be a decline, a more substantial decline. And we moved to today where we really have this sign of apathy in the market, which is sort of there are other forms of negative sentiment in the market. And there are those sort of get the hell out, so to speak, sort of sentiment, which is, I don't want to own this. I don't want to touch this. But I think the sentiment we have for the most part is highly apathetic. I think the hodlers out there, the people that are holding, the expression that is for those that are holding cryptos more long term, they're probably not even looking at what they're holding anymore. They're probably ignoring the market most days, if they're not in the business, so to speak, like myself. And there are those that have really no interest. They might make a smirk, they might make a joke about that crypto market, but they have no interest in touching it. I often use the ATR, average true range, for just measuring volatility. I mean, there's a lot of measures of volatility out there, but the average true range on a daily basis at the top was about $1,800 a day. And we're averaging around $140 a day in Bitcoin. That's how dramatic the price action has slowed volatility-wise from the top to the bottom. And I think that's really corresponding to that apathetic level of interest. But there's nothing new under the sun. If you've been in cryptos long enough as I have, you know that this bear market itself is a non-event. We've seen Bitcoin and we've seen other coins decline far more than 85% at times. I mean, some of our altcoins have almost retraced their entire dollar bull market, 90%, 95% loss. And Bitcoin's done the same thing several times to its history. I like to look at charts in log. You don't get fooled by sort of the percentile moves, the absolute moves in dollar figures. You're really looking at the percentile moves in the market. And by that measure in log, Bitcoin has hardly dropped. We have a genesis, or the first price that is published, and it's about 0.3 cents when Bitcoin started in the early days for some early purchases, and we climbed to $19,000 with several drops bigger than 60% along the way. And this drop really is tiny compared. We have hardly even retraced the bottom, the Mt. Gox bear market, which is here, and the bottom 2015. We've hardly even retraced back to that level. Which is, it actually is possible that we go see that level again if we don't see this bottom that we have here continue, which we'll talk more about. So nor was this expected. I like to pull this slide out from Trader Expo. This is my first talk at Trader Expo in February 2018, as I started that circuit. And I was tracking this February rally at the time, and I had said that, if we really fail here, we're really coming down into this large blue box. This is a very typical chart artifact that I place on my charts. I got this from Avi to say this is our range, which is support, and I'll do the same thing in terms of targets often. And I said, if this February rally fails, we will likely see an eventual drop into long-term support, which falls between, depending on which data set I use, 4,600, 4,700 at the top of the box and 3,050 at the bottom of the box. Where did we land eventually? 31.20. So it wasn't, while in the early days of this bear market, I didn't necessarily see it as a long-term rally. Once we hit February 2018, which is really only a month and a half later, I really knew we had a strong bear market and was eventually going to drop into that 3,000 region. We had another April rally, which was really another false rally. We watched that support, but once that broke, and Bitcoin actually never really participated in that rally, we really had another confirmation that we eventually come into that 3,000 level. I didn't have the exact path down. Corrective waves, we'll talk a little bit more about, but they take a lot of twists and turns along the way. And so they tend to be harder to track than impulses themselves, but eventually we got there. Now the question is going to be whether we hold that 31.20 level, which we'll talk more about. I think these things are funny, just really important to look at. A lot of crypto traders know the site Bitcoin Obituaries, which has hundreds and hundreds and hundreds of these little tag lines from articles about Bitcoin's demise, and this one is from CNBC. Bitcoin has no unique value at all. 38.52 is the price this was written. But we can go back to May 8th, 2011, and Bitcoin was 312. Why Bitcoin will fail. So this really speaks to sentiment and how everyone is very anxious to call the end of Bitcoin during a bear market. But honestly, if we're really honest with ourselves, crypto is here to stay. I can go on about the theories and the reasons and the usefulness of crypto. I think crypto has a lot of work to do, but we really have come to a point where it's a normal asset class. And so here's the Bitcoin street cred, and I'm talking about the Wall Street cred. Futures began trading, as we know, in the end of 2017, and the CME and the CBOE. I think the COBs are already out of business in terms of this trade, but the CME is reaching volumetric records recently as of February in their futures contract. Do we think that these futures contracts exist for retail traders? I'm going to submit to you that no, they are a hedging vehicle for institutional trades. There's a rise of institutional liquidity providers. It's just a list: Galaxy Digital, Kuna Capital, Cumberland Mining. I'm hearing of more and more of these liquidity providers and large funds that are in the crypto business, mostly Bitcoin, some Ethereum, and some of the large cap coins mostly. There is accumulation going on amongst large fund investments, including university endowment funds. I personally have been party to requests to help with liquidity and help with advisement of institutions. I would not out who they are, or it hasn't happened a lot, but I know firsthand that institutions are involved in this market now. So there's a lot of, while retailers are apathetic to this asset class, largely not interested, we know for sure that institutions are increasing their interest, and it's just normal for large funds to be able to enter a market. They need to have price action that allows them to act quietly, or they'll move the price too aggressively. The OTC market, this was a quote from Josh Lim, who's trading director at Galaxy Digital, is very much an estimate at a recent Trader Expo. So quoting him is, I know he was making an estimate himself, but he's in the business. It's running about 200 million a day, at least at that time, which was about a month and a half ago. No, sorry, it was in November, so quite a few months ago. That's an estimate, but and it's also much smaller than much of the retail trade that's happening on all of these Bitcoin exchanges, including BitMEX, is just flying every day in terms of volume, but it's also derivatives exchange. But still, the point here is that under the nose of retailers, we have institutions that are slowly accumulating this asset class for a long-term purchase. They can't move in and out of this market very quickly. These are long-term holds. The supply of Bitcoin is slowly getting sucked up, if you will. That may leave a lot of altcoins that are never going to be traded by institutions to the retailer. But eventually, this is going to put some pressure on supply and prices. So just keep that in mind. That's not to stoke you to go run out and buy as much Bitcoin as you can. You have to trade carefully, but I do think it's a little bit funny when people say we need an ETF or we need something to give this market credit. I'm sorry, but the institutions are already starting to give it credit and starting to put their money on the table. Slowly, carefully, but it's happening. So let's get into outlook. What's crypto market outlook 2019 and beyond? Again, I'm going to look at this from Bitcoin's perspective mainly, and then we'll talk a few other coins that I'm looking at. I need to give you guys a quick intro to the Elliott wave theory, just so you understand the mode by which I analyze markets at a broad brush level. Again, this is what Elliott wave trader. This is what most of our analysts do. We have a few non-Elliott wave Elliott wave principle based analysts, but most of the site is based on the work of Elliott and the work of Avi Gilbert, who founded the site. 1941 should mark the final correction of the 13-year pattern of defeatism. This termination will also mark the beginning of a new supercycle wave 5, comparable in many respects to the long advance from 1857 to 1929. Supercycle 5 is not expected to culminate until about 2012. So this is what Ralph and Elliott said in 1941, and you have to imagine where we were at as a country during that time. He was speaking about the general stock market and just outside of the Depression, where no one was really looking for an economic advance nor a stock market advance. And here he claimed that the market was going to advance ongoing until 2012 and really start that year. If you're a historian of markets, you know that we did have some bear markets in the 70s, and of course we had the tech wreck / financial crisis bear market. I look at it as one corrective wave in both of those bear markets from an Elliott wave perspective. But really those bear markets were sub-waves of this larger wave 5 that Elliott was calling out. And that wave 5, he was off by quite a few many years because it's ongoing, but that's really speaks to the extensions that we see sometimes in the Elliott wave theory. It's also really, this quote speaks to really a bold prediction made by Elliott at a time where the country itself was sort of just reeling from economic crisis or sort of trying to recover from it, and really no stock market rally was what anyone was looking for. So he was really playing against sentiment, and that's what I'm trying to do today, largely with the Elliott wave theory. This is what Elliott wave structures look like in the market. If you're a very visual person, you'll see this already. Markets advance in 5-wave patterns that are fractal in nature, and every motive wave, which is the wave 1, the wave 3, and the wave 5, are also subdivide into 5 waves. And then corrective waves, which are 2 and 4, largely subdivide in this ABC, although triangles and other things are other patterns we see, most fall into this 3-wave pattern. So if you will, Elliott suggested that markets sort of take 5 steps forward, 2 steps back, if you will. Sorry, 3 steps forward, 2 steps back, if you will, and that transform in these 5-wave fractals. Now, if you look at this, one thing I want to really point out is that it's the wave 3 that really the Elliott wave trader is looking for, because it's always the longest wave, or generally the longest wave, except in some commodities, and it's always the longest wave generally in cryptos. But it's also often the fastest wave. So if you're interested in trading a volatile asset and making money quickly, you're really looking for that 3rd wave. Now, because of the fractal nature of the market, you can get a little 3rd wave on a day trade, you can get a large 3rd wave on a swing trade, and you can get a large 3rd wave in a bull market, which is what we largely saw in Bitcoin over the last 2 years. So we're really trading for that extended 3rd wave. And then as you look through this, at some point in time, the 5 waves top, and then you get a larger degree 2, and then you'll get another 3rd wave that sort of goes right off the screen. So that's the fractal nature of markets. Now, while Bitcoin is in right about here in terms of my count, my perspective on it, looking for that 4th of the 3rd, and then eventually we'll climb into its last 5th wave. We have a bunch of altcoins that are down here in wave 2 pullbacks for a potential large 3rd wave move that will dwarf Bitcoin in terms of performance. Just talk about the sentiment nature of the Elliott wave. So when you're coming down in a downtrend, you get that first wave up. There's often a lot of disbelief, and then you get that pullback in wave 2, and you often hear those voices saying, "See, the bear market's returning." But that wave 2 never drops below the beginning of the wave 1. And it's really that sentiment there where the 3rd wave kicks off. And the reason the 3rd wave is the longest and fastest is because no one's on board. They're forced to come into price later and chase price higher. And by the time they're all in, then you start to get the fourth wave, and you get that frustration. Now, I've said to you earlier that Bitcoin is in a fourth wave of some degree, and I believe it's sort of fourth of this third, but this frustration voice of sentiment should be very familiar to a lot of Bitcoin traders. That's the voice of the fourth wave, and eventually you end up in another euphoria. Housing market 2000, what is it, 7, 8, 9, wherever it topped. That was euphoria, and that was a fifth wave of some degree in the housing market. And you know that everyone was getting in. People that could not afford houses were getting in. Tech Wreck 2000, if anyone was around trading during that time, I sure was. That same sort of emotion. New economy, these tech stocks are going up forever. Those are the voices of euphoria. And we certainly saw that at some degree during Bitcoin's rally into 2017. Trapped and false relief. I mean, these are the A. A is where a lot of traders get trapped out of the fifth wave, and you get the sort of false relief rally and the B wave rally before the C sort of demolishes you, and you get that utter despair in a large degree wave two. So that's where this is where we are in a lot of alts right now. We're down here in that wave two. So if you're in cryptos, these sort of voice of sentiment should be very familiar to you. It is very much handled within the Elliott wave theory. Just so you guys know, real quick, we teach this on the site freely to members. Again, I learned as a member, but all of these patterns have a mathematical structure. All of my work is based on these ranges. So one example is the wave two typically retraces 61801. It's not always the case. It can be 764. We can have some shallow wave twos at 382, but we really like those deep wave wave two retraces. And then the third wave is always the longest, and it tends to be 1618 of wave one in log, and log is very important because if you do it in linear, it's going to be way off, especially in cryptos with their volatility. If you need those log calculations, I offer that on the site, but I use MotiveWave software, which does it native. So where are we now, and where are we going? So again, next long-term milestone, and this is just using the count from the Genesis early price action. I do have about 3 alt counts running for Bitcoin because some of the early data sets are a bit hard to read and interpret. So I do hold at least 3 viable long-term counts with their own sets of supports and resistance based on Elliott wave theory. But so I'm going to give you the main one. We're right now at about 3,800 in that range, 3,875, 3,900 today, roughly in that range. I actually this is about where we were at when I made this presentation. And if we have bottomed, my next target region is 65K. You can see that big blue box. It can be as low as 30. It could be as high as 125,000. 65 is sort of the median, and there's a tendency for Bitcoin historically to extend in its fifth waves, much like gold does. And that should give us actually the higher range here. 65K to 125 would be what I would more likely expect. If you look at that, the red there, the ABC, it's a little bit blurry, but that's an alt view where we need a deeper wave 4 that can drop back as low as 475, but we probably have a B wave rally either from that 3120 bottom or a $2,500 level if we drop through 3,500, which I'll talk more about. But that's an alt count. It doesn't change the long-term targets. It's sort of a detour. There's a lot of projections Fibonacci-wise into this 65 to 125 region. So that's still my main expectation. But it may start from lower, which again we'll talk more about. If you look at this in this main count, this is only the top of a third, so we have another fourth and fifth out here, and it's kind of getting us to astronomical prices if we survive support after that. But I'll hopefully be around when we hit that top, and I'll be marking support when that bear market starts off in this distance. So there's more bear markets to come, of course. So where are we at now? So again, we had a December low. I have marked that low as this wave 4 support, going back to the chart we had below. It's not confirmed yet. And we had what looks like 5 waves off the low. You can see it subdivide here as 5 waves. The third wave has got more subdivisions within. That's what we're looking for. We also have the fib extensions we expect in a 5th wave. Further, we have this, here's the 3-wave pullback. We've got a wave 2 here, and then we have another 5-wave division here. The problem with this structure here is it can be interpreted as a 3rd wave, as 3 waves, and further, it reached an extension that we don't like to see the one of the 3rd reach. It's a little high. If you guys have followed me on Twitter, I kind of warned about it. Avi and I wrote an article about that level. Ethereum and Bitcoin did the exact same thing Fibonacci-wise, and so they both warned. And that day on the side, I warned. I said, "Hey, raise all your stops." And soon enough, we got this really hard rejection in price that night. Fortunately, most of us who are on the site walked away with some short-term profits if we were trading that way. But we have sort of a nebulous structure even after we have this nice 5 and 3 back. Now, what matters in all of this is that in the end of the day, this level of wave 2, I forget where this is at exactly, was it 3,300, needs to hold. But most ideally, actually, I want to see this structure here hold 35 region. I mean, this chart was built a little ways ago. We've climbed up into 39 region and what may be a leading diagonal for the start of this 3rd wave. But if we see a drop back roughly about 3,600, we most likely will see a decline back down into 3,500. And if that ever turns into 5 waves down, then I will be primarily bearish for the next key level on the long-term chart, which is 2,500. So this is the setup in the end of the day that we're starting to watch for a more long-term bull market to start to unveil. This is again the fractal nature of Elliott wave theory. I've shown you the long-term chart. Now I'm zeroing in on the swing trade that we're looking at here, a swing trade setup that we have here, which targets about 6,000. And if we fill out that 6,000 as 5 waves, proper extensions, and I can go on and on about the measures we put on, what I mean by proper extensions, then we have a high probability setup for at least further rallying in 2019. So we're watching this very closely. This looks like I didn't change my title here, but if we see 6,000, forgive the price here, but if we see 6,000 here, then again, we would expect another wave 2 of a different degree pullback to about the 2K region. And then we'd see a rally to about 10K and 13K. Now, if we get a rally to 9K and 13K, I will not only say that 2019 is a bull year, which again, back to the setup here, if we see 6,000 and 2K in 5 waves up and 3 waves down, then I would be suggesting that at the very least we'd see a B wave rally up into this region. But if we follow through into this 9K to 13K region in a structural 5 waves, then I will be expecting us to have started the climb to 65K and beyond. Okay, so it's all about price structure from here. If at any point in time this becomes a 3-wave rally, then I'll be looking for that B wave top. Further, if we fall immediately through 3,500, I'll be looking for 2,500. For me, in terms of a trader, for long-term traders, it becomes a bit difficult. But as a swing trader, primarily myself, it's just all about rolling up my stops. So right now, ultimately, my long stops are at 3,500. I do a lot of scalping, so I rolled up all of my stops into that zone we had on February 22nd before we really dropped hard. And then as we rally into, if we can stay over 3,500 and see a rally into the 4,000 region, I'll be rolling up stops as we go. And then at the same time, starting to build my sort of long-term accumulation larger. All right, so it's just playing all of these levels, rolling up stops as you go, and then just being skeptical, if you will, around the rally until we really get the all clear, which for me is 5 waves to 9K to 13K. Now, after that, we're going to see another pullback before the real launch into over our high at 19K and on 65K. So even after this level, we're going to start seeing some very hard pullbacks. That's just natural and how markets evolve, and Elliott wave theory explains that to us. The other thing, again, we're going to have to look for, this is a real red dot, but in this region, if we rally in 3 waves, which 3 waves has a symmetrical nature. So if we see the waves kind of roll out symmetrically, and where you don't see that 3rd wave, 4th, and 5th really extend up into this region properly, then we'll be watching for 5 waves down, and then we'll start to expect to see at least a hit from here of about 1600. 2500 would be sort of a fortunate stop if it really stopped there. All right, so we still have to be very cautious of this market, if you will, until we really get the all clear from price action. From a long-term basis, in the meantime, we've had some really beautiful swing trades along the way. But Bitcoin, as you know, if you're a veteran crypto trader, you know that Bitcoin never outperforms the rest of the crypto market. It's sort of the slow money, if you will, within the crypto market. I mean, immensely volatile, dropped 85%, but we had so many altcoins drop so much more. At the same time, they beat Bitcoin all the way up by many fold. Even Ethereum, the next largest market cap to Bitcoin along the way up, I think it still holds either 2nd or 3rd. Was more volatile than Bitcoin and outperformed it to the upside. If you think about its entire 2017 move, that's just the nature of small cap versus large cap, and the lower liquidity coins just tend to move more. One of the coins. So here I'm just going to describe a few of the key coins that we're looking for in terms of the 3rd wave. So EOS. A lot of the crypto purist community is not bullish on it because it's sort of a semi-centralized cryptocurrency. But I'm bullish on it largely because of this very high X wave. While the rest of the crypto market was in a downtrend, EOS put in this high X wave, which is very similar to a B wave morphologically, and that was really a strong indication that its long-term trend would continue. It's sort of a trend after it's seen 5 waves up. It's sort of a trend that has a hard time going into a bear market. Eventually, it declined to the 764 retrace, a very deep wave 2. And we now have the beginnings of a move off the low that potentially indicates the beginning of this 3rd wave. Right now, I'd like to see it climb to $6 at a minimum. $9 would be better. But even after that, we should see a $2 pullback to around $2. And then we'll see this really strong launch if all of this plays out in this 3rd wave. And my eventual target for the 3rd wave is 150 to 180, depending on which fib it hits on the way up. Actually, sorry, this 150 should be pointing here. Eventually, this one is well into 400, so I've got the arrow pointed the wrong way. So the 3rd of the 3rd is 150 to 180, and this one will be close to 400. So that's one we're really looking for on the site. NEO's one. I think I should probably put another degree in here because I don't think we'll see this level of price progression during this calendar. But we have the beginnings of a 3rd wave also in NEO. I'd like to see it move into the $12 region more immediately. We'll probably put another degree, roughly about 110, and eventually that will set up a move to 700, which, if this one continues to hold support, should play out for many years. I think it's probably pretty hard to believe now because NEO is not getting much play, but it may be it just runs through this 3rd wave in kind of a stealth mode, and then eventually people really turn sentiment-wise. And people were immensely bullish on it in 2017. You just don't hear about it much more anymore. I certainly trade it occasionally now. We have other potential multi-month 3rd waves. These are just some of the examples that we're tracking. Elliott Ether Classic is one. Litecoin has surprised us. I mean, we've been tracking a 3rd wave, but it's actually been quite ahead in terms of moving through its fibs locally faster than I expected. I have not been very bullish on Litecoin until now. Flow is one we're looking at. Steam is one I've been a long-term. I've had a long-term expectation for a 3rd wave in. TRX is really a new one I'm watching very closely. And then BNB, I mean, it's already about to take out its previous bull market highs. And that should be wave 1 of a larger 3rd. And there's many, many more. I'm just giving you some of the list, and we'll cover all the targets and swing trades on the site to help people navigate them. Just a quick conclusion before we wrap up and take questions. We saw a terrible bear market, but it was neither unexpected nor unique to its history. I hope you really see that if you're new to cryptos, that this bear market was not unexpected, and also actually really not very big. It just feels terrible when sort of we have more of a mass adoption of crypto assets. We have more people involved, sentiment gets more heated, but really in terms of history, it's quite small. We have the early signs of a bottom that we may have our initial move to 65,000. I still am highly skeptical of it. Watching every swing trade to see how the price structure develops. Again, that 13K region, provided that it moves there in 5 waves, will be a sign that long-term investors should be accumulating. I mean, long-term investors can start now, but they really need to watch that 3120 low, or even watch 3,500 if they're looking for a tighter stop. Once we hit that 13K in 5 waves, as I mentioned, we'll get another wave 2 pullback of another degree, and that will be a really strong sign to get on board before the larger third waves makes its way to third wave of this 5th wave to the 65K region. Long-term stops are wise below December low. I just mentioned that. And if Bitcoin continues to climb, as I mentioned, altcoins will come alive and outperform, or at least that's expected. I think that's also expected simply because institutions are now interested in Bitcoin. It's really producing a lot of liquidity. It's just going to move slower. As things become larger in market cap and you have more institutions involved, you've got hedging vehicles like the futures on the CME. And we may even see some ETFs. You'll see so much liquidity in the market that it'll just be slower. A lot of traders trading it short, a lot of traders trading it long, and hedging it as they go. That'll just slow it down. So we'll see altcoins where really institutions can't play. The liquidity is tighter. We'll just see them come alive and outperform. At least that's my expectation currently, and we'll just have to see how it goes. I think that's all I have, Tom. If you're interested, here is a link. I think Tom's going to share it with you as well. That'll give you, you can join for at least a free trial. We don't take credit cards. You can at least get a feel for our community and for my analysis ongoing on a daily basis. And you can also follow me on Twitter if you haven't already. That's all I have, unless we have questions.
That's fantastic. So anyway, we do want to open up the opportunity for everyone to ask questions. Just another link. I did earlier put that cryptocurrency link. I'll drop that in the chat again for any of you so that you don't have to feverishly write that down. But what I'm dropping it in the chat right now is, Ryan did a great job giving you kind of an introduction to Elliott Wave, and some of you may already be very familiar with the patterns and also our Fibonacci pinball method that was developed by our founder, Abby Gilbert at ElliottWaveTrader.net. But we do have a public education section, so I'm dropping a link there. And we do also have included just in that public education section are some detailed write-ups and a slideshow walking you through learning Fibonacci pinball, which is what Ryan was referencing, some of those mathematics and fib levels that he uses to get his targets. So even before you do decide to get started on the site, which we hope you come in and at least take the trial, you can start to learn some of these basics about what you're going to be seeing posted every day. So Ryan, I'm going to get you started off with the first question. I would just say, however you would best want to answer it and define it, whether it be on the potential reward or maybe if you feel it has maybe the least amount of risk, so to speak. But what is your favorite altcoin right now?
I actually like EOS. I'm going to kind of dive away from Elliott Wave. I actually like the way it's used. The ease of use is actually the best I've seen in the sort of smart contract group of cryptos. But again, more than that, I showed you this third wave potential. It's highly liquid. It's a large cap. I do prefer to trade as many large caps as I can, just because getting in and out of them, it just avoids getting trapped in the trade. So I find that EOS is a nice balance between the sort of large cap and the altcoin, really micro caps. I'm starting to really warm up to TRX. Again, that one has nothing to do with fundamentals. I've only began to interact with it, but the chart is beautiful. It's starting to form a nice low. As long as it continues to play, I forget where our support is right now. I think it's 0.019, so almost 2 cents right now. And the DEX trading, I'm very partial to coins that trade well on DEXs because I like to do some of my trading on decentralized exchanges off the normal exchanges. Those two charts are really the ones I've been focusing on lately. I mean, I think there's a lot of good ones. Litecoin, Steam are sort of old favorites of mine. Flow is coming into my attention level, so I have a lot, but I'd say right now my focus areas are EOS and TRX from altcoin perspective.
Fantastic. So besides GBTC and ETCG, are there any other ETFs for trading cryptos that you suggest? So I guess would you suggest those, and are there any others that you see out there that are worth paying attention to?
So correction number one, GBTC is not an ETF. It's a trust. It's not managed. It's not a managed NAV like an ETF. A lot of people call it ETF, but it's actually net. And what happens is there's a premium quite often, and often it's worse at bull market. It kind of runs with sentiment, so to speak. So people pay more for GBTC than the Bitcoin within. I think right now the premium is around 10%. We've seen it at 100%. But the answer is, if you're American, the answer is no, unfortunately. If you have a European passport, there's some great products by Coin. I think it's Coin One. I forget, but it's based in Sweden, and they have an Ethereum ETF, a true ETF, and a Bitcoin ETF. Those products are better. Other than that, I mean, if you want to trade the futures, Bitcoin futures on CME, it's not horrendously large contracts. It's manageable. But I mean, honestly, I'm always honest with people, like, it's so much easier to trade the underlying asset. I mean, once people get over that hump, and of course we teach it on the site if you're not familiar with it. I've got docs, I've got a beginning video that's on the site for those that have never done it. A lot of people thank me for that video because it helped them get involved. It really isn't that hard. I really think that people should try to get past that, just that hump of sort of learning and security, learning about staying secure, etc. So once they're in, they're usually hooked.
That's fantastic, and thank you for that, giving that user that clarification. So some people are mentioning some other, maybe their Elliott wave counts or other targets that they have. I think you mentioned that the key support you're looking at right now in Bitcoin is 3,500. And I think you were setting up, what maybe just to repeat again, they're actually specifically asking about the 1,800 range on analysis they saw. Where was on the alternate count? Do you recall what that target was?
Yeah. So in this situation where you have this red B wave, actually, so one of the Fibonacci pinballs, we actually measure if this is a higher degree fourth wave. If you measure from this circle 2 to circle 3, this really should hold a 50% mark, and that's where 3,000 held. Once you're below 3,000, you have a higher degree wave 4, and that would be a wave 4 of the primary wave 4. So that means that we would be all the way in this degree over here, and that can actually easily go all the way down to 455. But Bitcoin has this historic shallow wave 4 a behavior, and so what I would expect, it's basically I've done a study of all the wave 4s that Bitcoin has gone through, and then the 1600 region would be a very typical Fibonacci level for a larger scale wave 4. But I would expect this to subdivide into larger, we call a flat in Elliott wave. So we have a B wave rally. It can start from 2500 if we dropped low, but I would expect at some point we get a large B wave rally before we drop back into the 1600 region. The problem I have with all of this again, is that if I look at altcoins that are in these deep wave 2s, and there's so many of them that hit the key wave 2 Fibonacci's and have started to rally, I would be surprised to see at least Bitcoin go to 2,500 first. It would surprise me, but I can't say it can't happen. And I certainly will be shorting if we're breaking 3,500 or be looking for short setups. But I won't be too surprised if we get a B wave rally in Bitcoin while many of these wave 1 of 3s start to work out, and when you get the pullbacks in the 2 of 3, I can see Bitcoin coming down in a C wave into the 1600 region. It would be surprising for people to see altcoins hold the bear market low while Bitcoin doesn't, but I won't be surprised at all. That makes sense. I hope that answers the question. I kind of end around it, but I hope that makes sense. And basically, this red is a larger degree. It's basically an alt count where this is a larger degree primary wave 4.
No, actually, this is really good. Yeah. I'm sorry, I don't want to interrupt you, because I actually see we have probably about 3 other questions that roughly or loosely pertain to this chart, the red count, and potential targets thereafter. So this is actually really great that you came back to this one, and are going back over this, because I do think this is probably a point where at least some people are asking, could this move decline now in Bitcoin have been all of maybe just all of a wave 2 instead of maybe the 4 as you're counting it. There was some questions on the red count and clarifications on those levels.
Well, one thing I want to say, because a lot of people have, I don't know how many people have tweeted me or got me in LinkedIn or whatever in social media and said, my count says we had a 5-wave top. But from Avi's work, this level right here at 19,000 by no means can be a 5th wave Fibonacci-wise. It just did not reach high enough in terms of Bitcoin's history. So if we have seen, if we're going to see say a bear market decline beyond 455, then I have to say Bitcoin topped in 3 waves in a large ABC, because this has not properly extended by. I've pulled fibs from every low back in 2009, 10 to try to find a scenario where this could be a 5th wave. And by at least the way we do Elliott Wave on ElliottWaveTrader, this is not a 5th wave. There's no way. It's a 5th of a third, but it's no way the final 5th wave of Bitcoin. Just doesn't work.
That's fantastic clarification, and that's exactly what I think people that are coming to the service are looking for, that type of analysis and insights. So Ryan, what exchanges do you use, or I would extend that out to also say have heard good things about, or know that maybe there are many members using and are enjoying?
I have the whole gamut of big exchanges, so Coinbase, Kraken, Binance, let's see what else, Bittrex, I think are the main. I use, I have a lot of good things to say about Binance in terms of not only the liquidity that's on that exchange, but also their security. At least they've shown to be really advanced in security. I mean, they caught hackers in the game and trapped their assets, and before they ever escaped the exchanges. So they've had some at least a history of doing that and being a good team. You have to be aware they're in Malta now, and that there's some debate over this. But I file FBAR if you're American. I file FBAR, foreign banking asset, relationship or something like that, just to tell the feds I've got overseas assets. I recommend just doing it, so you don't have to worry about it. Pretty easy, takes 5 minutes to file. And so that's probably my favorite exchange with alts. Coinbase is my fiat to crypto exchange. I also actually like the Abra app. It's actually a little bit faster than Coinbase. I don't keep anything there. I don't want to have anything that, any cryptos on my phone for very long, but I do a lot of fiat exchanges with the Abra app. Quite convenient. Then I send it to somewhere like Binance or Coinbase or wherever to do trades. Kraken unfortunately used to be a crappy exchange, but they've gotten so much better in terms of the way their exchange works. So again, none of these are endorsements, but those are kind of the main exchanges in the US, and then Binance is a main global exchange, and I've used them all and I like them. So.
And maybe just so someone that is brand new to this process. And again, I want to mention, and I'll post the link one more time to the cryptocurrency page, which does have some introductory webinars that Ryan did previously. So certainly things could change, but he was starting to give you a table of names and some of the pros and cons, or I should say maybe pluses that differ amongst the exchanges, at least at the time that he did it. But how would you suggest someone go about learning the different exchanges and seeing which one or ones would be a fit for what they're looking for and their comfort level?
I think that if you're American, you should start with Coinbase. One, you got to go through the KYC with them, know your customer rules. They'll take your passport or whatever, your ID. It takes some time, get your banks hooked up and all that. You need that anyway to get fiat exchange. I would go through that process just because that takes time. And then beyond that, I think setting up at least Binance or Bittrex. I tend to favor Binance a little bit. I have both because some coins are just not on both, or not on one or the other. Again, just to if you want to trade a lot of the small caps. Coinbase is only a large cap. Largely, it's got a few small caps, but it's largely a large cap exchange with fiat. And just start there and get that going, and then you have to learn how to send coins around, which we went through in the video how to do that. It's really simple, but that can be scary the first time. So if you buy, say, Bitcoin on Coinbase, and you want to buy, say, EOS, you need to go to Binance, and so you'll send Bitcoin over to Binance to buy EOS. And then after that, you really want to learn how to use wallets, because honestly, I don't think anyone should keep all of their assets on exchange. I mean, hacking's becoming a lot more rare. A lot of the security of some of these large exchanges has gotten so good, and I don't think Bittrex, Binance, or Kraken or Coinbase has ever had a hack. But still, I don't think you should keep large amounts of assets on exchange. Now, I know some customers that got hacked, got compromised, but the exchanges themselves, as far as I know, have not been hacked. So you really need to learn how to stay secure, but just in case, keep some of your assets off exchange onto wallets that are on your computer or some other device, or cold storage, where you just print out the address and send stuff to it, and don't have it on a computer. Is another security option. We talk about all those things I think we had a security doc that we put on that same link, so that's available.
I do believe that we have that there, and it's also just referencing again about the site. There's a community of fellow traders doing this, so you'll have people talking about what they're going through. Has somebody else experienced that? Not only is Ryan offering his insights or things that he's come across, but you have fellow members also chiming in and letting you know what they've experienced. Some of which who are in the same position that you were in, maybe just only a month or two ago. So that can be very helpful in going through. I had some questions about Ripple. Are you? I know there's a huge amount of coins that you're actively following.
Ripple. I mean, Ripple. Everyone's excited about Ripple because it's sort of the banker coin. I mean, the feds are actually exploring the Ripple platform for getting rid of the Swift wire transfer. The chart itself, unfortunately, is I'm long-term bullish on it, but it has. If you actually look at last fall, it had a 9-wave triangle. It went sideways for I think it was like 4 or 5 months. I think it's actually doing that again. So I actually think it will go nowhere based on the price structure for probably even a year. There might be some good swing trades where it pops up into the upper region of the triangle, which could even be as high as the bull market high potentially, or a little bit under. But unfortunately, if you look at the structure, timing it is extremely difficult. I have avoided it altogether right now until it really fills out a triangle. Triangles are the best things to get long for, because moves out of triangles, just like Ripple moved out of its triangle. I think it was something like 3-week rally, and it was like 20x or something like that. It will do that again. But meanwhile, every Ripple trader that's super bullish right now, in my opinion, is going to be frustrated for the next year. That's just the way the chart looks to me. So I'm not touching it myself, and I will accumulate when I see that triangle reach its sort of apex, when it's really clear to me. And even amongst triangles, a 9-wave triangle is extremely rare, and that's exactly what it did last fall. It's sort of like Elliott wave lore. I've never seen one before until now. And boom, then it finally just 3 weeks. 3 weeks, if you were not in and out, you didn't make your money. And I think it'll actually do that again eventually.
Yeah, and for some of you that are mentioning that you did come a little bit later, or if you've been trying to feverishly write down levels, we certainly understand. We are recording this presentation, and we'll make it available. I think for members of the crypto service, it should be on the site later this evening, and then for everyone else, we are going to package it up in an email and get it off to you as soon as possible, probably hopefully by tomorrow. You should see a copy maybe tomorrow evening. So that'll be great. I want to give just an opportunity here. So I'm kind of drawing a line, and I'm considering a lot of the questions, because a lot of them had to do with this chart that we're showing right here. And I believe Ryan has covered all the questions. So if anybody wanted to get any last minute questions in, please just welcome me to one more time, resubmit them, or if there's maybe one I missed. Oh, Ryan, one thing I just wanted to ask you while people are coming is, while we don't have really an ETF here in the States that we're using, there are some Bitcoin related companies. At least that's how they're trading. And are there any individual stocks in addition to the coins that you're tracking?
Yeah, we opened up blockchain stocks to the service, right? So we took took the blockchain stocks, at least largely out of Zach and Garrett's StockWave service, and I took them on. I think that we have some. There's sort of an interesting bifurcation, if you will. There's companies, technology companies that are using blockchain, and I think what we see in those is they largely follow the stock market. They're not really following patterns that are very different from the stock market. And then we have some very crypto-focused stocks like Hive, Riot, who have this really strong downtrend during the crypto bear market. And now they're starting to kind of follow these swing trades that we're seeing in the cryptos themselves. So there's a few key stocks, Riot, Hive. I like actually having trade access to the Canada exchange, Venture, and TSX because and Americans can get access to that quite easily. I have access to it for both gold miners and for crypto stocks. And we see some better charts, more liquid charts on that exchange. And one of them I really like is actually Galaxy Digital, which I mentioned Josh's Lim quote in the presentation. The OTC, they're an OTC liquidity provider, and their charts kind of following the swing trades that we're getting with these early crypto swings, and really having these targets that are quite amazing in terms of return. Now they're very illiquid charts, and so I would never suggest anyone go really strong in them, except for a sort of small lotto position, if you will. But it might be down the road that we actually see these in larger bull market and more liquid. So maybe that we get on these a little early and then see them mature as assets. It may be the case over time. I looked at the balance sheet of Galaxy. It's really not a happy picture. I'm an MBA as well, and I was looking at the balance sheet. I'm like, oh man, that's not pretty. But watch the Elliott wave patterns and get some swing trades out of them, I'm sure. And I am putting those charts out as well.
Fantastic. Just a couple quick questions we'll try to sneak in here. So just for confirmation, if we were to get the red count, could you just confirm what the red B, just roughly speaking, what that level would be?
Here's the problem with B waves is they really have no target. What you have to look at is internal structure being symmetrical. So if you look at this downtrend right here, this has a lot of symmetry within the subwaves here, and then the subwave from here through the B and into the C. So it's really, when we're looking for B waves, we're looking for the first move, and then we measure what's called the 1.0 extension off of that move, which is basically even in log. 1.0 is basically 100%. So A, B, C, and if it has that structure, then from wherever, then we can call that a B wave if we see 5 down out of it. That would be the start of C. So unfortunately, it can be 9,000, it could be 13,000. It can actually even be a false breakout B wave at 30,000 and still see a decline. Now, if it's 30,000, it probably will not go to 1,600, but all of those are possible. And so that's why, I guide everyone through it, and I watch the structure of these wave patterns. And if it's very symmetrical in nature, then I have to say, well, be on guard for a B wave. And then let's watch for 5 waves down below support, and then we just run like crazy or short. So unfortunately, I really can't say. There's a tendency for them to be 50% to 764 of the decline. So that's, if we measure this decline from here to here, there is a tendency for them to be 50% of the way up to 764 of the way up. But unfortunately with B waves, that statistical retrace is much lower incidence, if you will, than say a wave 2 retracing 618 of a wave 1. Does that make sense? They have such statistical variation.
Right, and this is an example of, now if you're actively looking to, say, trade a certain market, this is where you're referencing key levels and then stops, and I think that these are kind of examples where it becomes really important, because we're giving projections based on the expected levels, but it's not absolute. So that's where you have to define your risk, and each person will have to decide that. But inside the service, you will, and especially for Bitcoin, and I think you said Ethereum, those you are also even tracking even more what we would call micro scales.
Yeah.
So even for somebody that's
example off this, this is what happened on site. If any members on, they should remember this by now. But we had 5 waves here, and I think it was 3,300 or something like that, and this came in $10 from support here. And then once we had this move to here, then I called for 3,500. So you can see how the stop moved up. The same thing is going to happen when we're up at 13K. I'm not going to leave everyone with a 3,500 stop. It's going to be up tighter to price. In fact, I gave a very tight stop this night for micro traders, because I give stops for scalpers, micro traders, and swing traders as best I possibly can. We had a stop that night. I put my stop on, and I woke up in the morning with a profit, but not as much as I had expected, because if we had gone through this level hard, we would have been way up at 4,000, but we failed. But we still walked away with profit. It's the same thing with this. We'll move the stop from 3,500 to there'll be a stop up here once we have the third wave. And then if we extend and break out, we'll move the stops up to wherever that's at. It really depends on the structure, so that we don't get caught in we won't get caught in 1,600. It just won't happen. Just impossible if you're paying attention to the stop.
Yeah, and for Dean, just for your question, and just in case anybody else has that, yes, absolutely, Ryan is tracking the Elliott wave patterns on many different coins, and you would expect to see setups just like this. That's why I wanted to stop and answer your question here, where he's giving you the expectations of where the pattern is counting, and then again in the write-up, in the detailed information that he'd also provide along with these charts, he'd be then confirming what the key support levels would be for that count. Maybe if we lose that support, what we'd be looking at next. You would actually get that type, I like to call it a roadmap. You get that roadmap of where he's expecting it to go, and kind of in Elliott wave terms, why, as well as also referencing the key fib levels and why we'd be coming to those. So that is definitely something you'd see. I'd say coming up on the hour here, certainly we'd be happy to go longer, but we probably need to button things up. But I think this is a great question, is just to kind of confirm, as we said, you're covering a large amount of coins, but day to day, what would you say the focus is, maybe the handful or so that you feel have maybe the strongest representation on the site and are, say, most actively covered and followed? If someone were to sign up, what would they see day in and day out?
Well, I promised to cover Ether and Bitcoin down to 5-minute bars. I promised that. I can't. There's no way to cover every coin like that. But the reason I've chosen those is there tend to be bellwethers. They also are highly liquid and can be traded by micro traders. So I'm giving, for some of the scalpers on the site, I'm giving really tight Elliott wave patterns. I can't promise that on every coin. We tend to cycle through coins. You know, like what happens on the site is people request a coin. I can kind of start to see what people are favoring, but I've been trying to tell people, when I zero in on a chart and I take a chart that I've only been looking at as a day chart, and I start looking at an hourly chart, that means I'm starting to see a setup. So I've been trying to kind of help people understand my mood, because I'm also there to teach trading. And so, for example, we are tracking really tight setups now in Dash, Bitcoin Cash, FLO. We were tracking the TRX. I think it's going to drop a little bit further before we get that real setup. But that was, I hated Bitcoin Cash. I really never traded Dash, but the chart starts showing me something different. I start zeroing in. And I'm not saying I dislike Bitcoin Cash because of the Roger Ver and Craig Wright fights and all that stuff. That people know what's going on in the crypto world. I just didn't like the chart. And suddenly that chart started showing me things, and we recently caught a really nice swing trade in Bitcoin Cash just for the first wave 1 of 3, and we're still in it on the site. No, sorry, we stopped out. We had a micro stop run last night, but we still got out at profit, and we're looking for another setup to come. Dash, I just called a swing trade on it on the site, a little bit lower from where we're at now. But it should be a strong push into the 200s from the 80s, and if it holds support. So that's kind of what happens is I think it's rotating. I mean, again, Ether and Bitcoin are sort of mainstay charts just to get a read on the market and provide that for this very liquid micro trade, not just using Elliott wave, but like lots of scalping techniques. But then when we get these bigger swing trades, and really I can only focus on hourly charts for most cryptos, but really that's all we need to get these really nice swing trades. And then I'll start to zero in on a couple key charts. Sometimes I weren't aware of them until a subscriber asked for them. They say, hey, this one's popping. Can you look at it? We look at it. I might say, don't care for that. This is why. Or hey, you know what? Let's look at some swing traits for this one, and then I'll start zeroing in. So.
No, that's fantastic. So I just want to welcome everyone. I know there's some additional questions, and I also know there's some questions about users looking to get started. I do want to reference you again to the links I provided in the chat, and if you weren't able to pull those, please don't hesitate. Email into info@ElliottWaveTrader.net, or just go to ElliottWaveTrader.net and use the contact form. Just let me know that you were on the webinar or that you had some questions or you're looking for those links. As I said, we have some about information on Ryan that's available that includes some articles. We have a cryptocurrency service page, which has even more resources available, including some of those webinars that Ryan did when the service first started, that goes over things like setting up a wallet or transferring and things of that nature. And I think that would be a really good reference, even though they're a little bit older now, they'd still be a very good reference of the process, as well as some additional resources for you to watch. And then if you feel like you're ready, of course, we welcome you to take advantage of that 15-day free trial. If you've never tried the service before, you can come on in and actually experience what's going on each day, as well as get that real-time analysis from Ryan on the different mainstay and altcoins that he's following. So
the trial folks also get the stock market room, right? They get everything else for the 15 days.
That's
right?
it. If you've never tried the service before, there's actually up to 12 different services that you can take a trial to. And as you go through the process, you'll be able to pick and choose which one you want. We have a little description there of all the ones that you want to try. Even if you have tried, let's say you've tried one of the services before, we have a Stockwave service on individual stocks, or our flagship service built on our founder Avi Gilbert's S&P, metals, oil, and US dollar analysis. Even if you've tried that before, don't think that means you can't get a trial to the cryptocurrency service. You absolutely can, and if you need any help, you should be able to actually just log in under your old account, and we'll know that you're eligible for it, and we'll walk you through that. But if you need any help with that, again, please don't hesitate to email in. You can also call in. All of our contact information is on the contact page, and we'll be more than happy to help you get started, as well as help direct you to any tools or resources that we have to help you start to learn Elliott Wave, Fibonacci Pinball, and cryptocurrency. We do have those things available for you to help you get started on your journey. So, everyone, we just want to thank you so much for your time. And Ryan, I can't thank you enough for taking time out of your very busy schedule to share your expertise with us. We really appreciate it.
No problem. No problem. Thanks, everyone.
Have a great evening.